Welcome to the Velocity Podcast. I'm your host, Barry Palmquist, Branch Director for the Velocity team. And with us today, we have a professional in the insurance industry, David Thompson.
Thank you.
David.
Glad to be here.
Glad to have you. So I've known David Thompson for a very long time. Actually, I remember him pre-beard. And he's a great guy. He knows a lot of things, and we're really looking to help educate our clients on insurance, how it affects and partners with their mortgages, and just provide some general data and information.
Awesome.
So again, thank you so much for joining us. I'm glad to have you here and taking the time. So let's talk a little bit about insurance in general. So, let's start with your background.
Okay.
So, just hit us with what got you started.
I got started in insurance in 2017. Mm-hmm. And interestingly enough, so I'm not the norm. So the norm is everybody starts in home and auto insurance and goes from there. I started in life insurance. Ooh. And then what I found was I could sell life insurance. It is hard, but I could sell it. But all around me were all these people just selling home and auto insurance like this. And I'm like, okay, why can't I do that too? And so it spiraled into that. So I got my start at Farmers as a captive agent and did that for about a year and a half and then left to go independent. Independent just has more options, pure and simple. More options usually leads to more ability to solve problems. So I went to independent from there, and then about 2 years after that, an opportunity came up for me to become co-owner of that agency. And somehow I'm in year 5 of ownership, and I still write business just enough to where there's a lot of stuff we only find out by doing the thing.
Oh yeah.
And then we have a lot of conversation within the branch. And that's the short version of insurance.
Well, let's actually talk about something that non-insurance related for a second. So you are married with how many kids?
5.
5 kids. What are the age ranges?
The youngest is 10. The oldest is 18 now. So they're all crunched in there.
So this is where David and I are very similar. I am also married with 5 kids in total, a blended family. And my kids age from range 12 to 30. And I'm already a grandparent.
I'm not, but I swear.
You look more like a grandparent than I do.
I'm ready for it. But
are you?
I think I'm probably 2 to 3 years out.
Okay.
I hope. I mean, not tomorrow. Would be.
So the oldest is
18.
Okay, and boy or girl?
Girl.
Okay.
She's about to graduate high school with an associate's degree, and she's been with the same boyfriend since her freshman year.
Oh yeah.
Which I gotta say I was only with my wife like a year and a half before I decided to propose. Mm-hmm. They've been together for 4 years, so that's probably gonna happen.
Yeah, with the age ranges of my kids, we've already got the one that's married, obviously, with the grandkids, right? And now we've got such an interesting dynamic with the other kids. But what's funny about that, and the reason that I asked that question is because, well, you also do the insurance for my older children.
Yeah.
And, granted, David does my insurance as well. He's an outstanding agent. And one of the reasons that I've stuck with him for all these years is because, as he mentioned, options. Whenever the mortgage payment, when I've looked at buying a new home or, taking on another vehicle, especially with all the kids of driving age that have been in my house, David has always stepped up to help. And even if he refers me over to one of his other agents to assist because his hands are full, they've always taken really good care of me. And that's one of the things that I like so much about having a good relationship with an insurance agent. What people don't come to realize, I think, as much is that, yes, they probably shop their insurance, especially for their vehicles, very frequently. Maybe not so much their homeowners, but having a good relationship with your insurance agent, and correct me if I'm wrong, really assures that you're going to be in front of the best possible rates that you can get at any given time.
For sure, because I think this relates to your industry as well, but the game changes all the time. Mm-hmm. I mean, it changes more than I'd like, but we can see that because we're running like, probably 100 quotes a day as a branch, so we can see all these like, on the molecular level, like these little changes. This carrier all of a sudden no longer likes this size of home, and so we talk about it, and so we're constantly problem solving based on what the market gives us.
Well, let's talk about that for just a moment. So you mentioned that the carrier's making small adjustments and changes here or there, but in the last year, your industry especially has experienced a ton of volatility.
Yeah.
Right? You've got insurance companies that are pulling out of some states or just not renewing or writing new policies, correct?
Yeah, there's companies that have both gone out of business. There are companies that have basically put a pause, and so they've sat on the sidelines waiting for all this weirdness to pass. There are companies that are still in business and they've decided to non-renew thousands of policies, and then you get anywhere from the ones that are renewing or anywhere from 0, which is unlikely, up to like 40-50% rate increase. And so we just we've never reshopped more policies than we have in the last year.
Well, that's one of the things that I can speak from personal experience that I really actually enjoy about my personal insurance relationship with you is that you've got a great team of customer service reps, or right, that's what you call them, customer service rep. Obviously, a great staff of agents, but we get the notification every year. Anytime that I just make a phone call, I get called back right away. You respond to emails. Of course, I might text you personally, like, "Hey, dude, what's going on?
Did you get my email yet?
Did you get my email yet? Hey, so and so bought another car." Now, I buy a new car about every 6 months.
Yeah.
You can't count how many vehicles I've had over these last, almost 10 years of doing insurance for me. I have a sickness, but I usually try to do things the right way. But with all these kids and things, I'm always like, well, somebody's going to end up getting this car, or somebody's going to end up getting that car. And my driveway's always full.
So in our agency, we refer to it as like when the picture changes. So when the picture changes, meaning I sold a 15-year-old truck and I bought a brand new one.
Yeah.
It changes. When I'm buying a new house, changes. When I'm adding a 16-year-old driver, everything changes. And so as much as we would love to just renew everybody in the same carrier for like 20 years, what really happens is we're at least looking at everybody's picture, if you will, at least twice a year.
Well, so let's talk about homeowners insurance in general, because obviously for the majority of our viewers, that's something they're most interested in.
Yeah.
So right now, we're actually about that time of year on the mortgage side where we run a full escrow analysis of a client's account. So if they've had a change in their policy and increased the rates, that's going to impact their mortgage payment. We have to determine whether or not we have enough funds in the escrow account. If they don't, as a courtesy, we then pay that full policy on their behalf, and then have to come back and recast their payment based on a repayment period for whatever they were short on the escrow piece. And a lot of times that's when you're going to get that call, right?
Oh, yeah.
And it's like, hey, my mortgage payment just went up $300 a month. What do I do? And I've experienced it personally. I've been there and gone through it. What is the best thing that a consumer can do to stay in front of that? Is it just make sure that every year they're reaching out, get themselves, I don't want to say re-quoted, because it's not, because like you say, it'd be great if they could stay with the same companies, but do they have an option to re-quote and stay with the existing policy, existing insurance provider?
Yeah. So our process in a nutshell for like renewals, and anytime someone calls in and says anything like that, we have a reshop process, but it really starts with if we can keep them in the same carrier. Like we write really solid policies, because the last thing I need is a claim not getting paid and the homeowner's upset. Why is the homeowner upset? Usually because there was some little hole in their policy that they didn't know about. Because the homeowners insurance is actually pretty complex. We write policies as complete as we can. It's with the insured, involved in that process. And so when we have these calls, step one is let's look at the existing and see if there are discounts that we can add Let's see if there are policy changes we can make without destroying the policy. And then if none of that works, then we go reshop the rest of the market and go from there.
So you bring up an interesting point. What best way to ask this question, I guess, would be, so there have been a lot of changes in coverage types, which I think has been, again, correct me if I'm wrong, but these are the insurance companies trying to say, hey, look, we don't want to exit this market. We want to stay, but due to extreme weather conditions, things out of people's acts of God, right? We now are having to adjust our rates. And what can a client do to help to offset that piece? Now, obviously, one of the things that I would assume everybody's familiar with is bundle, home and auto together is always very helpful, right? Yeah. But what else can they do with their actual mortgage, with their actual homeowner's insurance policy to help offset some of those changes?
Bundle and save is usually number one, and that's because sometimes when you bring the auto into the equation, well, the homeowner's discount can be as much as 20 or 30% off.
It's very impactful.
Which moves the needle pretty hardcore. Other things are these safe driving programs that, as long as somebody doesn't mind the app monitoring, they're
do not want to monitor.
Right. And most people don't.
I'm not surprised.
but that again is a 10 to 15% discount, and it moves the needle. So aside from that, then we're looking at, can we, like for instance, the water coverage of this specific water, because there's 3 or 4 different water coverages. Okay. Anyway, can we move one of those down to where they still have more than adequate coverage, but we're not in a situation where it's not going to be covered. So those are some things. And then, as much as it is what it is. So sometimes we call it a 4-square bundle. So the home and auto is with us, but we will put the home one place and the auto a different place.
Okay.
And so that's another part of that process where we prefer the bundle with the same carrier, but sometimes the way these carriers have set up their rating structure. There's literally carriers where you can put it together where this carrier is pretty easy on the home and it's a good policy, but they are terribly high on the auto. So you take that home and you put the auto with this carrier who great auto rates, terrible home, you kind of mix and match. And so it's a puzzle. We have to kind of put the picture together and see what works.
Mm-hmm. Well, so being in Texas, and your primary client base is Texas and Oklahoma. That's where you're licensed.
Texas and Oklahoma. We're in a couple other states, but that's the bread and butter.
Tornado Alley.
Yeah.
Right? So roofs are always a big consideration. Now, we had a conversation the other day, and you were mentioning how some of those changes have been made. Because in years past, it was always, hey, I've got a 1%
always
deductible.
1%.
But now, granted, as a mortgage provider, we will allow up to, I believe, a 2% deductible and a certain amount of wind and hail coverage.
Right.
But on your side of it, there's been some pretty significant changes on just whether or not a roof can even be replaced.
Right. So about a year and a half ago, this conversation started with the carriers, with the home carriers. And the problem that they're trying to solve is profitability. And where they're losing all their money is paying out on roofs. And it's partially an insurance thing, and it's partially a roofer thing, and it's partially a lender escrow thing, and all these things. But so what we're seeing now is, whereas in years gone by, the standard was 1% wind and hail, period. And to go to 2% was freaking unheard of, is ridiculous. That's terrible. You shouldn't do that, whatever. And now we're literally in a place where a lot of carriers will not even offer a new policy at 1%. It's becoming extinct, replaced with 2%. And there are a couple of carriers or a couple of situations like counties and such where that's not the case. But as a whole, it's 2%. And there are some carriers that are launching at 3%.
Wow.
Yeah. And And I'm like, okay, how does that work in lending? If I write a 3% and I send it over to lending for closing, then the lender kicks me back and says, well, we can't accept that. So that's a problem. But there's a fourth weird version of this that exists where there are a couple of carriers that are wanting to basically do away with wind and hail coverage, but it's like roof coverage, and replacing that with not a percentage, but it's like a buyback. So you don't have any roof coverage at all. Here's an endorsement of $10K. If you need a claim, your deductible is $10K. It works as a discount, but you're starting with no roof coverage, and then you can buy it back. It's I think it's a terrible idea.
I'll be honest, I agree.
Yeah.
It's a terrible idea. I mean, let's talk about that. That actually brings up an interesting point. From the mortgage side of things, we have obviously a very diverse client base, but in today's economy, the average consumer doesn't necessarily have $10,000 laying around to help with the cost of replacing a roof. And the less coverage they have available to them, the more likely they are to not get the work done, which can cause further damage to the home. It's not just about the roof at that point. It's about leaking and mold and all sorts of other problems that could cascade from there.
We've had this discussion only within our agency, but so...
secret time.
Huh?
Secret time?
Yeah.
Let's go.
We call it coffee talk.
Okay.
Anyway, so, okay, great. So people are priced into a 2% or a 3% thing. They were barely able to, they bought this house in like the 2 or 3% rate lending scenarios, at which point, since then, their home insurance is basically doubled in price. So the only way to fix that is to jack up the deductibles. Okay, cool. So we do that. Now they're at a 3%. Then they have to make a claim. Unbeknownst to them, their deductible is actually $12K, but the roof costs $15,000. What do they do then? What I'm concerned about is that we're going to have a lot of people doing repairs and pocketing the money. And then in a couple of years, they put the house on the market. They do a inspection and they find mold and all kinds of stuff because they didn't actually repair the damage. And I can see this becoming a problem in a couple of years. But we're band-aiding.
So being in North Texas, we deal with, as mentioned, a lot of extreme weather conditions. The last few years, especially, we've actually had to deal with, right around January, February, we've had severe cold snaps, right? And that's something that I'm always really kind of curious about, where when you're in essentially what's considered a warm weather state, and then you have a polar vortex come through, pipes freeze, the domino effect of damage from there just, get your list out. But are policies written kind of... Well, I really maybe the better question to ask would be, do the insurance providers really customize the policies they write by state? Meaning,
No.
like to weather events, or it's kind of a blanket, right? So
It's
if I'm in Minnesota and my pipes freeze, I have the same kind of coverage as I would in Texas when my pipes freeze.
That's
right?
relatively true. Yeah.
Did you see a lot of claims for her?
Oh yeah.
Oh yeah.
These policies are like, if you think about it, an insurance company that writes in 48 states or whatever. Well, they're trying, for simplicity, they're trying to write the same policy with the same, so as an agent, I can add all these options back in or take this out or whatever. So they try and put it together like that. And so us knowing the state's situations, we see policies where, like I said, there's 4 types of water coverage, really. And so we'll see 3 of the 4 on the policy, and the 4th one just isn't on there. And those are the ones that, of course, ironically, the claims happen. And then they're so the client is shocked that they didn't have coverage. Now, we don't write that way, but that's what we're seeing, and that is a reason why people go shopping as well, because they're mad.
So I know I can speak from my experience on the. I've been in the mortgage industry now for almost 30 years, and you're coming up on your what?
In the industry?
Yeah, almost your 10th year, so 8 years now.
8, 9.
you make mention to a client had no idea they didn't have this one piece of coverage. Do you find that there's a lot of unscrupulous agents out there that are not telling you to bash the industry?
No,
I'm just saying.
It's to some degree, it's the agent that doesn't actually know what they're doing,
And not properly educating.
not properly educated. It's really a training issue, and so we
But not
will.
a Foursquare Insurance.
No, not us. But we'll find these policies, and then we're trying to bring them in, and we're like, hey, your current policy doesn't have this, this, and this. We'd like to fix this, in the new policies. And they go back to the agent, and then the agent has no idea. Or in some cases, there are a couple of carriers that they just like captive carriers. Captive meaning they can only offer that product.
Okay.
They literally don't have that coverage. It just is what it is. They're still writing the policy the best way they know how. It just doesn't have that coverage. So,
It's good stuff. Well, so one of the reasons that we brought David in today was also to formally announce that Click and Close's Velocity team for our Texas and Oklahoma clients are officially partnering with Foursquare Insurance to provide that additional service to make sure that they've got a reliable and trustworthy contact where they can get the best possible quote that they can to hopefully make sure that even if they don't change providers, but they know and better understand and are educated on what they have available to them, what their rights are as a consumer, what kind of coverages and policies they should have. And that's why you bring up such a great point where you're going to sit down, you're going to take a look at their existing coverages, you're going to then suggest what you would provide, and obviously a better coverage at that point, assuming so. Or, hey, we can actually remove this and give you that and provide some value or reduction in cost, or maybe better coverage at the same cost.
hopefully it's better coverage, lower cost.
Yes, and save them some money. Because one of the things that our homeowners have to deal with every year is not only do their insurance rates go up, but their tax rates go up as well.
Yeah.
So they're constantly dealing with the adjustment of payment. It's as much as we'd love to say that, hey, your payment is $2,500 a month from payment 1 all the way through payment 360. That's not the case because of outside factors out of our control.
Right.
Third-party costs that are associated with owning a home. So I really appreciate you coming in to go over this. It was great stuff. I really like to educate myself as much as I can on anything that's peripheral to what we do in this industry. And so now what we're going to do is we're going to hit you with a little bit of a speed round. All right. We want to get to know a little bit more about David. So I have a list of 10 quick questions.
And I don't know these questions.
He does not know these questions. He has not been prepped. He is not prepared. You ready?
Yeah.
All right, we're on the clock. Lose your keys or lose your phone?
Phone.
Okay, wow, okay. Spicy food or mild and safe?
I like spicy.
Yeah, there we go. If you could only use one app for the rest of your life, would it be a music app or a map app?
Oh, wow. I'm terrible with directions. I couldn't go in. It's maps for me.
It's maps for you? Okay, great.
Ouch.
Pizza night or Taco Tuesday?
Taco Tuesday.
Taco Tuesday. Crushed ice or big cubes?
Oh, big cube.
Big cubes, all right. Okay, window or aisle seat?
Aisle.
Really? I like to protect my elbows.
I like to be able to get away.
I'm an exit row guy. It's the legs, man. It's all about the comfort. Instagram or Facebook?
Facebook.
Yeah.
Ask me why.
Why?
Community.
Community?
I understand there's community in Instagram, but man, I can more
I can see that, yeah.
relational.
Agree. Yeah. You almost changed my answer with that right there.
Ah.
You're such a convincing guy. All right, leave a voicemail or just send a text.
Text.
All right. Unlimited snacks or unlimited naps?
Oh. So the old version of me says naps.
Here you go. And the closer we get to 50.
Yeah.
All right. So the last one's a little more serious, and it's one of my favorite questions that I like to ask anybody.
Okay.
I actually ask people when I interview them for LO positions and things. So, all right. What's the most impactful piece of advice you've ever received?
My grandpa was hugely impactful in my life, and my dad too. But my I did a lot of life things with my grandpa, and so one of the things he told me was, when you venture into a new thing, you always assume, like, it could be business or it could be personal or health goals or business goals or whatever. And you assume and you hope it's a straight line. Mm-hmm. It's never a straight line. It's supposed to be like this, but it's like, and he's like, just embrace the fact that it's gonna change, and what you think you're gonna do is gonna change. And interestingly, like I said, I got into this industry in life insurance because I wanted to help people, and I feel, well, I mean, today we do life insurance still, but now we do life insurance, we do home insurance, auto insurance, commercial, which is business insurance. Like, we can pretty much place anything anywhere. And so he was right. It's not a straight line. It's like all crazy like that.
I couldn't agree more. That's great. I know for me, mine was, and I've heard it a few times come up on motivational speakers and things like that. I follow on different social media platforms, things, and this was actually told to me a number of years ago, so it's always stuck, which is, you're a survivor. Every day is a new day, and no matter what happened to you the day before, you've survived it. So if you think you can't overcome life's challenges, just realize that whatever was presented to you yesterday, you're still alive today, you're still moving forward, and you survived it 100% of the time.
That's great.
Well, until you have a massive coronary heart attack, and then that you did not.
Then survive. You're not here.
But that's because it was just your time.
Yeah.
Right?
Yeah.
So with that being said, for more information on homeowners insurance, mortgage services, if you're looking to buy, sell, refinance, anything that you need to do, the Velocity team with Click and Close and Foursquare Insurance is here to help. Click on the link below for more information, or give us a call directly. Thank you again for spending this time with us, David. I really appreciate it. It's always a pleasure. Yeah. I consider you a colleague and a friend. Yep. And I'm looking forward to doing some great things together moving forward.
Awesome.
All right. Thanks, man.